There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, Auvorians, to the new merged Tuesday and Saturday broadcast. Had a corporate function this week and was not able to get to the Saturday broadcast, but I wanted to make sure I got a chance to present what I feel is going on this week. Take a quick look on the screen. ForexFactory.com is probably one of the most accurate calendars that's out there. Let's go through. I always try to filter out the red folder events so I can see what's coming up that's going to affect either currencies, commodities, or certainly the equity markets, or all of them. Do be really aware of this ECB press conference. Okay, anything that has to do with FOMC, right? So Wednesday's federal funds statement. Will they be raising interest rates again? Remember, the consensus currently is between 50 and 25 basis points. Can't say I'm really leaning one way or the other. It is all going to be in that FOMC statement that Jerome Powell releases. So, the most important thing really is just what are they going to say? That's pretty much everything. That and any inflation are carrying the primary headwinds of what's going on. It's almost like nothing else matters. It does. Unemployment obviously is Friday, right? So the unemployment, obviously it has historically one of the biggest news released this week as far as the markets, but right now it's everything to do with inflation, right? I've talked a lot about this. I'm not going to sort of drag this on, but wanted to just live with you guys real time peel through some of what's going on. So this is really nothing more than just markets, midday internals. As many of you may know, I introduced the hedgefundmanager.blogspot.com. It is a critically awesome aggregated piece of research that I use each day. So you can see news headlines. Most of this stuff doesn't really matter. But it'll help you just sort of see aggregate of what's going on with all the different headlines. It's just, the interesting thing I've seen about a lot of this is that, this is the biggest week for earnings. So as that sort of begins to unfold, I'll give a feel for to see what's going on. So, but as far as, actually, let me just take a quick peek here. I'm not going to get too much into any of that. All right, so we get the calendar. Let's go back to the markets real quick. This is going to be an abridged version because essentially we're all waiting to see what happens Wednesday. So everything I've talked about in the past, and for what it's worth, new to the podcast, just general, we as an organization, we have a lot of clients who listen to this, Auvoria Prime subscribers, obviously some of my students, some of our outside advisors, so we have sort of a very broad audience that are starting to jump on board with these casts. So I try to cover everything in a quick manner. The key really is with a lot of that is you have the markets that are essentially waiting, like you see in the S&P daily chart that's in front of you, by the way. Markets are really just waiting to see what happens Wednesday. So we're in a tight range. You can see the market profile chart on the left that is sort of capping the high of this range all the way down to the bottom, with the red line, which is the point of control, being a center point. It's got us somewhat contained for now. Haven't shown the NASDAQ a lot recently, but if you just take a look at the Qs, actually let me just use the NASDAQ index, but if we take a look at the Qs, it's a better representation. You can see a market profile chart and where we are as far as contained inside this area of the blue shade. This is where all the volume's executing, at least from a 70% perspective. We're contained within this region, so I expect us to, depending on what happens this week, either break out and have possibly other time frame players, being the institutions, lift us out of this area, or possibly go lower. I can't tell you what interest rates are going to be. I can't tell you what some of the future inflation numbers have seen. All I can do is just report on the fact that we're seeing prices, maybe with the exception of the RBOB gas spreads for gasoline and fuel, everything else is pretty much coming down a little bit here and there. So, one of the beauties, at least in my opinion, of capitalism is that in a perfectly run capitalistic organization or society, wills and ills of the system, supply chain issues, overpricing, you will typically they will almost iron themselves out over a period of time. The problem is we don't know the depth and we don't know the period of time. So if you're looking at the screen, one other thing I do want to show you is I think I talked about on, was it last Tuesday, I think? If you go to the website, firstdowntofinancialinc.com, this is my company, my partner Steve Ruff and I run this. We wrote a blog recently, has sort of a strange title to it, but I just want everybody to understand kind of why we're sort of against all these interest rate increases by the Fed. I think they're looking backwards, which was a big problem in the past as far as how things looked. We would prefer to look forward, and there's a lot of other things I'm really not going to get into today in our sort of short presentation, but it may help you understand kind of what's going on as things develop. All right, so let me just take a quick look at the dollar. This chart's probably been a pretty big surprise. Again, we've leveled off after a huge reversal. We've been in a complete dollar bear market, if you will, since the peak at the end of September of 22. It's been all straight down. A lot of noise in these charts. Obviously, if you look at a weekly chart, it brings a certain level of, I don't know, less noise, more sanity, maybe not sandy, but some clarity to the market. But right now, coming into a real big area of support, this 102 area is real strong. I would expect this to hold unless there's some bananasness that comes from some of these central bank meetings this week in the two developed markets we watched the closest, which is Europe and obviously the U.S. So just keep that in mind. Take a quick look at the U.S. dollar. From a euro perspective, again, let the market profile chart serve. There's a whole pile of resistance right here. Hence these couple of dojis that have formed the last 2 weeks. If you look at a daily chart on the euro, that's kind of what it looks like. It would seem to me this 1.050 area, 105, probably serves as some pretty strong support if we're going to come back to this, which obviously means the dollar's got to rally back up to the other side of the range, which is the opposite of what's been going on. So, as I often talk about, always pretend you're an institutional investor if you're not already, and what would you be doing based on how the markets move. And the opposite of that, or what I call max pain trade, is typically the area that the market's going to go to. So everybody's expecting it to lift, right? What they're not expecting is to revisit back some area. So that's a thesis I always suggest everybody form if you're a trader listening to this cast, and that'll help you, sort of look at the counter, right? One of the things I always try to do is, we, from clients, maybe a few jokes from some of the folks that follow us. We took a very bearish position as a group in client accounts back last January, And it was basically a year ago, and at that particular time, whether or not you were on board with us or not, your accounts went to mostly cash in the equity component. So of the allocations to clients' accounts, in this case the Charles Schwab accounts, those allocations went to a very light equity holding, unless you had a huge cap gains. So either way, we just haven't been on board with this complete pullback in the markets over the last year. So if the year-to-date numbers, you haven't paid enough attention to it. S&P was off, just a little bit under 20%. Nasdaq was off 30. Obviously, smaller cap markets in the U.S., as most of these equity indexes I pay the closest attention to, they were off anywhere between 25 to 30%, depending on the index. So it's been a pretty decent pullback. So as the clarity, if you will, which may or may not happen from the Fed, about inflation leveling off, and that the Fed decides to stop raising, right? I would imagine you're going to have an initial reaction and possibly it's almost like the market really just tries to put out like fake news, right? Because everybody just tried to rip. I bought the bottom. I'm going back up, and typically that is, it's, I don't know. It's like the mania of the current. I have a hard time explaining this. I always choose from a risk standpoint to take the opposite of where the overloaded boat is, right? Why? Because, efficient market theories and the multiple Nobel Prizes that have been awarded in this arena have taught us that in the most or any efficient markets, all known news is priced in. So you have to bet on something else that's going to happen, right? Just like when I teach students to look at a chart, I want to bet on that max pain trade, right? Looking for areas that the market may not have thought about, other than maybe some of the smart money, and that's where those pockets of stops are, right? So markets can have just whack days and go around and just completely annihilate the zones that one wouldn't think. I always say, take like a counterintuitive look at everything and then think the opposite's going to happen, which is kind of confusing. But so let's just take a look at the pound real quick. It's daily chart, tight zone, 167 on the high. Actually, let me start off with the GBP dollar first. I'll get ahead of myself. So high, really well capped high, by the way. Possible strong resistance here at the 1.2440 area. On the low side, right underneath, this is, you can call it the yellow line, orange line, what have you. This is what's called a squeeze zone. These are very, very accurate historically. Right at the 119 area. Bitcoin, I have not touched on this in a while. Can't say I've been on board with this rally, but I do want to show why I would not be on board, okay? And it very simply is this. When you have something breaking out from a long base, you'll have those that'll argue, especially since we're on a daily chart here, that this was a good base, right? And you have a breakout and there's increased participation. You want to see that. And we've kind of seen that here. But I think personally, if you are somebody that owns it from much higher and you had this rally take place, you're still holding crypto, and maybe you are a hold on for dear lifer, right? Might want to change your tune if you're overloading this asset class and lighten up some. Don't look a gift horse in the mouth, as my dad would always say. And oftentimes, as I say to clients, especially if they're overloaded in something they want to get out of from a risk standpoint, right? Crypto, real estate, maybe a bunch of equity holdings are getting clobbered on. Any rally is an opportunity to reduce risk, right? As I say, the markets are giving you a gift. Mrs. Smith, I suggest you take it. So, I haven't shown the DAX in a while. This is the European index, arguably kind of like the S&P. But I think this is really interesting from a weekly perspective. I don't know that I have the right data pulled in here, but see how we this value area low, essentially where all the volume was executing right around here at the 14,000 area, pretty solid support now because we've already made one trip back and then launched higher, right? This is a very sloppy, but yet maybe cup of handle breakout. But if we in fact are, and I know a lot trade currency pairs based on the DAX and the US 30 and some of the other stuff that we have our subscribers execute on the MT4 platform, I would say that if you're trading this, it's probably going to be heading back to this area. But ultimately, as you can see here, there is a ton of resistance up at this 16,306 area. And from a monthly chart perspective, yeah, all-time highs. So I find it ironic, and I can't say I've done enough research about it, that the European markets and the ETF that trades this, they've done considerably better than the US has. I mean, this is really quite a surprise. What's the underlying factor? I don't know. I don't trade or own enough European stocks right now to know. It does sort of seem like a missed opportunity, at least from my perspective. I would have loved to have held some of this in ETF form. But, you know, I don't know. Really haven't seen, at least as far as volumes, and we're on a monthly chart, so maybe if you back it up to weekly, but you're not really seeing a lot of participation here. So it's almost like if nothing's going on, they would be drifting higher, right? And I show this, and I don't normally show the DAX because this is a great example of if the world's falling apart and Russia's coming to crush, Ukraine and, potentially other countries, don't you think the stock markets would be completely in the toilet, right? So something different is happening, and that's that pain trade, at least from a macro higher level standpoint here. So I'd say maybe keep your eye on that for if you're somebody that's heavy in European equities, you've been looking to lighten up, you're getting a gift. What else do I want to talk about here? Take a quick look at spot gold. I still think that if we get back above this 2,000 areas, anytime you guys have seen over the last, what are we looking at, 3 years, right? There's been a seller up there. And whether or not we see it this time, I don't know. If we can get past this area, this will be the first time in many, many years you will see me see me say we are possibly clearing an all-time high. And if that in fact is the case, and there is volume coming into this market off that, which you're not going to see in the spot, but you will see it in GLD, right? It sets the stage for a much higher move in gold. And I know the gold bugs and all those knuckleheads on television, those weird ads, want this to happen, but this topped out a long time ago, and this is a great example of every time it's gotten up to this area, those that bought the breakout, essentially just got barbecued. But ideally, third time could be a charm. I know there's not a lot of our group that trades this, but believe it or not, metals will have their day in the sun eventually again. So I think that's pretty much everything. I want to touch on a couple of currencies, see what else is going on. Even as bearish as I've been, I could say I've been kind of wrong on NVIDIA. I really wanted to load the boat, and I rode this up for a trade, and man, this thing's just been absolutely rocking, but it's been all over the place. And even though these aren't great pattern setups in a lot of this stuff, it certainly can be argued from making purchases at long-term lows, right? Especially if you have a long-term hold-based horizon. And I don't signal NVIDIA out as any, super stellar top-of-list company. There's a whole host that fit that category. I just typically am not a buyer of this stuff during that period of time. So that's kind of where we are on what's going on. If you have Any questions, you feel free to hit me up on Telegram. And this video will be produced as always and uploaded to our channels. And I wish everybody a great week of trading. May the trades be with you.